Alright, good afternoon, morning, wherever you are. This is Harris County. I'm going to basically doing a live analysis of our current state of where we are in the market cycle. I'll start with Bitcoin, and then we'll round out with the general indices and the DXY as well. So we got a clear buying climax here, selling climax into the automatic rally, which is confirmed after Bitcoin. A little messy here, but closed above a 0.382. Let me just pull up a cleaner chart that'll actually be better. Right here, pulling it from swing high at 69,000 to about 15,000. As you see, Bitcoin went in between the 0.32 and the 0.5, completing the automatic rally, potentially going back down to 22,000 or so. Now that we've had our uptrend, we're looking for that downtrend now. Here was an obvious oversold area. Here is an obvious overbought area. Just looking at the candles, we have our resistances here on the monthly at about 30,000, and our support's about 23,000 or so. Of course, wicks lower is absolutely possible, and that's what I'm playing. I have buy orders at my 23,000 mark, and all the way low is about 19,000. Pulling up some key Fibonacci moving averages. Sorry, this is the 8 moving average. Bitcoin still closing it on the 2 weekly. That is a bearish sign. See, every time we're above it here, we're in a huge uptrend. Every time we closed candles below it, bear market. Again here, we had basically a second double bull market in 2021, and as soon as we started closing below it, bear market. Okay, again with this automatic rally or automatic reaction, went up to about 32,000 mark, and now it's been closing already about 6 weeks under this key moving average. Bearish, very bearish in the short term. Pulling up the weekly, this line here is the 55. It looks like it could absolutely come down to test support at about 24. That is in alignment of the price candle analysis we've done at that 23,000 mark. So that's confluence there. Going down to the smaller time frames, this green line here is actually the 200-day simple moving average, and it looks like we're about to close today on it as well. In about 3 hours we will see for sure, but not a very good thing to be closing below it. That is bear side implied. Okay, so all scenarios is looking like we are going to be having a downside likeliness. Okay, so let me just put a brush here as low as these local resistance and support structures here. So we could potentially go down as the lowest, I think, is about 19,000 or so. Again, these fib numbers I've used from this wick low here. Let me show you. From this move up to our recent high here in July 2023. Okay, so just doing it again live. We could pull it from this swing, this major move here at about, what is it, 24,800. So that'll give us our projected move right there into the golden ratio of 1,618. So textbook wise, about 22,000 is the low, which is in alignment of all the other analysis that I was going through. And if you see here, it does look like a macro M pattern, an M being a bearish pattern that has been playing out for about over half a year. That's a long time. So it's a pretty strong M. And using this measured move here, which I've already done, let me do it live here, using about 24,800 as the neckline or support, drawing that to the wick high of about 32,000 or so. I'm just going to copy and paste, Control V and Control C, Control V, and basically I'll use this measure move the day we close below it, which it does look like it is a triangle here. And historically, most triangles and pennants, this is more of a triangle, being a longer time frame, about 200 days. So it's a stronger move pattern. So whatever side it does break down or up, this is our expected move. So going down here, which is aligned with my thesis, about 19,000, about 20,000 right there. That is in line with some of these lower highs over here in a pretty well trading range. So definitely possible we go down there. I don't think we'll stay there for long, but that is the outlook. Okay, so now that was Bitcoin. Going over to the Dow Jones, we have a macro fib pull here from all-time high to the low in September. Made an amazing automatic rally, but has recently formed, and I went over this on my last video that I made for the Grand Rising community. Again, it being a long term, at least over a week, which this is about 60 days. Okay, very long. That's a triangle, big pattern forming in confluence with the golden pocket here. These orange Fibonacci lines signals the movement is over, and most likely over, like using this wick top here to the bottom of this triangle move. We could expect it to go at least down here to near the 0.5 fib to complete its automatic rally. Textbook wise, it would have to go down to the 236 all the way down here. I marked it white just so we could see it a lot clearly. So that's textbook wise. So we're looking for a move slowly but surely to down there. And yeah, it could happen, actually not slowly, it could actually happen fast. So you see we're already moving down from this triangle, almost like falling off a cliff already. So just 4 straight down days of triangle, 1, 2, 3, 4 days red. And I assume as we get closer to the 618, close below that, you know, most likely it's lights out, because the big trading range is over here near the 0.618 where my cursor is. So pretty thin air going down. Definitely could go down to the 236. Now going over to the other indices like the S&P 500. I didn't touch these charts since last week when I did the analysis, and yet again the analysis has been showing light to what was likely to come. Similar to the Dow Jones, 4 candles straight down. So we're expecting also going down to the 236 eventually, but at the early short term, a move down here with that measured move with the triangle that I got from wick low to the top end of it. So basically in confluence with each other. Now looking at the NASDAQ, and what do we have here? The exact same thing. So all these automatic rallies have been basically completed throughout the 618. I mean the 786. Sorry. The golden pocket numbers here. There's 3 that I laid out. Let me put it actually in values and not percents. It's a little easier to see it like that. I prefer it like that. So looks like we are headed down. This whole year we've been going up ever since January. Basically a good 135 days or so straight basically up. So we are definitely possible, and you know, have that clear mind that we could go down for, you know, half of the year or so, because we already just went up for basically the full year. So that's a good 9 months, 8 months of just up. So as we know, we should not be just going straight up. Things do have to correct and cool down. So these 3 indices that I just went through shows a sign in confluence with Bitcoin of going down. If these indices go down, Bitcoin goes down. Altcoins, they get hammered even harder. So that's why it's important to just focus on Bitcoin in a bear market, because Bitcoin is the least volatile coin, and it holds its value the most, and it's the first mover when it comes to